Finding a simple, reliable trend signal is easy. Using it the right way, that's where most traders fall short. In this video, you'll discover practical strategies for trading with the Super Trend Indicator, a tool that not only shows the trend direction but also delivers clear buy and sell signals. You'll learn how to filter out false setups, adapt the indicator to market volatility, and combine it with proven methods for stronger confirmation. It's simple, it's effective, and it delivers when you follow the rules. So let's begin with the basics. When you load the Super Trend Indicator, you'll notice a single line that shifts from green to red and back again. Using it is straightforward. If the line turns green, you enter a buy position. If it turns red, you close your buy and open a new sell position. There's actually one major drawback if you trade this way, because the Super Trend Indicator is constantly generating signals without pause. When you're using it, there are no moments where you simply stay out. You're either taking a buy or a sell position. There's never a break. This can be a huge problem because if you're a trader, you need to know that the market isn't always trending. The market can also go in a range. Because the super trend is constantly showing signals non-stop, it will also show signals when the market is in a range. In this example, you can see that the market was on an uptrend and the super trend displayed a buy signal. You can see that the trend had already ended and the market went flat. But the problem is, because the super trend is always giving signals, it displayed a sell signal even though there wasn't any trend. What we need to do is filter out these range-bound markets so that we only act on super trend signals when the market is truly trending. Here's how you do it. First, add 3 separate super trend indicators. Set the first one to a value of 3 and 12, the second to 1 and 10, and the third to 2 and 11th. We use the super trend strategy by entering trades only when all the lines are the same color. For example, in this chart, the bottom line turns green while the other two remain red, so you hold off for now. Then, all the lines switch to green. That's your cue to take a buy position. In another example, the top line turns red while the other two are still green, so you stay out once again. Then, all the lines change to red. That's the moment to open a sell position. For our exit signal, there are actually a lot of ways you can do this. The first one is to set a take profit or stop loss, so you close your position if your trade reaches a certain amount of profit or loss. Another way is if the color of the lines no longer matches. In this example, all the lines are green, so you take a buy position. Next, one of the lines switches to red, and now that the lines no longer match, this is where you want to close your buy position. The next strategy that I personally use when trading the Super Trend Indicator is by combining it with another indicator such as the 200 EMA. Because the Super Trend can be used to detect short to medium term trends and the 200 EMA can be used to detect longer term trends, these two can be the perfect combination. For this strategy, I'm using the default settings of the Super Trend Indicator. You only take buy signals from the Super Trend when the price is above the 200 EMA line, and you only take sell signals when the price is below the 200 EMA line. For example, in this chart, the Super Trend gave a buy signal, but the price was still below the 200 EMA, so we don't take positions yet. Once the price crosses above the 200 EMA while the Super Trend is still green, that's the time to take a buy position. You close your trade when the super trend turns red. In another chart, the super trend indicated a sell signal, but the price was still above the 200 EMA, so we don't take positions yet. Once the price is below the 200 EMA, while the super trend is red, that's where you want to take a sell position. Next, the super trend turns green, so this is where you close your position. Another strategy that you can combine with the super trend is with the Kumo Cloud. The Kumo Cloud is basically an Ichimoku cloud indicator with all parts disabled except the 2 lead lines. I also changed the color so that it's easier to look at. The rules of the Kumo Cloud are very simple. If the price is above the Kumo Cloud, you only take buy signals. If the price is below the Kumo Cloud, you only take sell signals. If the price is inside the clouds, you don't take any positions. For example, the indicator gave a buy signal, but the price was still below the clouds, so you don't take positions yet. Next, the price is inside the clouds, so you still don't take any positions. Next, the price is above the clouds, while the super trend is green, so this is where you take your buy position. It's the same for a sell signal. You take sell positions only when the price is below the clouds and the super trend is red. For the exit strategy, you can use a take profit or stop loss, closing the trade when it reaches a set profit or loss level. You can also exit if the price moves back across the clouds. In this example, the candle closes inside the clouds. That's your signal to close the position. So, here's the bottom line. The super trend can be more than just a green and red signal machine. When you know how to filter, combine, and confirm, it becomes a powerful tool for precise entries and exits. By applying these strategies, you're not just following an indicator, you're trading with structure, confidence, and clear rules that keep you out of trouble and in the best opportunities. And speaking of rules, this is where risk management meets reality. David Paul reminds us that even the best setups can destroy an account if your position size is too large.
In a 50% system, unfortunately, you get 2 bad ones every 4 trades. Ladies and gentlemen, if you were to bet 50% of your coins on any one trade, you go bankrupt every 4. Gets worse. 8 trades in a 50% system, you have a cluster of 3 bad ones in a row. That means, ladies and gentlemen, that if you were to bet a third of your coins on any one trade, you go bankrupt every 8. And most people go bankrupt because they bet far too much on any one single trade.
And discipline doesn't stop at numbers. Phil Godeker explains why holding yourself accountable is just as vital for protecting your capital.
You know, one of the great benefits of being a trader is that we're our own boss. We work from home, and for the most part, we answer to nobody. It's really everybody's dream job. But, you know, on the flip side, there's nobody there to hold us accountable. So let's say we all were to work for a company. It doesn't matter whether it's big or small. And 2 to 3 times a year, we bend the rules. Or 2 to 3 times a year, we just make that same mistake over and over again. And we cost this company tens of thousands or possibly hundreds of thousands of dollars. What would that company say to you? You know, most likely you'd be out of a job. That's why it's so important as self-employed individuals, traders, we hold ourselves accountable for our actions. Now, as a trader, I realize the most important thing I can do on a daily basis is preserve my capital. Taking excessive risk, taking on marginal trades, or adding to losing trades is an easy way for losses to add up.
So, the next time you sit in front of a chart, ask yourself, are you trading to grow your account or to feed a craving for action? That answer may shape your results more than any setup ever could. If you're serious about building consistency, confidence, and control into your trading, the Psychology of Trading playlist is your next step. It features insights from David Paul, Tom Hugard, Alexander Elder, and other world-class traders, all revealing what really happens behind the charts. Because in trading, what happens behind the scenes isn't just important, it's what makes the difference. I hope you enjoyed today's video. If you found the content helpful or engaging, please give it a like, as this helps the video reach more traders like you. And don't forget to subscribe to the channel and turn on notifications so you never miss our latest insights on the markets and practical trading strategies. Sharing this video with your friends or on your social networks can make a big difference and helps our community become stronger. Now, if you want to go even deeper and get access to exclusive content, early video releases, and extra tools to support your journey, consider becoming a member of the ComLucro Trader community right here on YouTube.